A storm is building inside the most important institution in global finance, and the market may not be ready for what comes next. Fed Governor Christopher Waller, normally a calm voice within the central bank, is now signaling something dramatic. He's prepared to dissent, and he's not just challenging policy. He may be positioning himself to replace Jerome Powell as the next Fed chair. This isn't just a policy debate, it's a test of credibility, independence, and the future of U.S. monetary control. Let's walk through what's really going on. Waller says the labor market is on the edge. Last month's jobs report, almost all the growth came from the public sector. Private hiring is stalling. Wage growth is slowing. The signals are there, and Waller wants to act before the cracks deepen. He's calling for a rate cut, now. But the Fed majority, including Powell, is holding firm. They see tariffs, geopolitical friction, and sticky inflation. Their message is, wait, monitor, respond carefully. That's the fracture. And in a system built on signals, that kind of disagreement sends waves. Because dissent isn't just about what's happening. It's about who leads and what the market believes. Right now, that question goes beyond Waller and Powell. Because behind the scenes, Donald Trump is preparing to reshape the Fed. And Jerome Powell's seat is no longer secure. Here's what's playing out. For months, Trump has floated the idea of firing Powell before his term ends next May. He wants lower rates, not just to stimulate growth, but to reduce federal debt costs. And this past week, the White House confirmed that Trump told lawmakers he might go through with it. The market flinched. Yields moved. The dollar softened. But then something unusual happened. Trump's own Treasury Secretary, Scott Bessent, pushed back privately. According to sources familiar with the matter, Bessent laid out a pragmatic case to the president. The Fed is already pivoting toward rate cuts. The economy is holding, and removing Powell would risk triggering legal chaos, investor panic, and a leadership vacuum that could stall monetary policy exactly when clarity is needed. Bessent reminded Trump Powell could sue, dragging the conflict into next spring anyway. And even if Powell left, Vice Chair Philip Jefferson, a Biden appointee, would step in by default. No political gain. Maximum market risk. But not everyone in Trump's circle agrees. Budget Director Russell Vought is leading a pressure campaign to discredit Powell, pointing to cost overruns at the Fed's renovation headquarters. It's a slow-burning strategy to build a case for cause removal, something that could bypass legal protections under current statutes. They've pushed for audits, site visits, and public shaming, all while urging allies to ramp up calls for more rate cuts. And yet, the deeper risk isn't legal, it's credibility. Because here's the core issue. If Powell is removed for political reasons, the Fed's independence, already fragile, may break entirely. The market doesn't just react to policy, it reacts to process, to integrity, to trust. If the Fed becomes seen as just another political tool, global investors will start pricing that risk. We've seen this play out in Turkey, in Argentina, in Italy, and it won't take much. JP Morgan's own PM, Amadeo Alantorn, recently said what many only whisper: the idea of an independent Fed is largely a myth. And yet, that myth has held the system together. It's what allows the US to run deficits at scale, to borrow at low cost, to act, even when it's unpopular. If that credibility erodes, here's what follows. Bond yields spike, not because inflation is out of control, but because trust is. The dollar weakens, not because of trade, but because of uncertainty. Risk premiums rise, because if the Fed can't act independently, nothing about the US monetary system is truly neutral. And this isn't the only place we're seeing confidence slip. Because while the Fed is fighting to hold control, some of the largest corporations in the world, like Walmart and Amazon, are quietly building a parallel monetary infrastructure. They're not waiting for interest rates. They're creating digital dollars, stablecoins, that could eventually bypass the Fed altogether. If you haven't seen our episode on that, you should. It connects directly to what's happening now. Because when the center weakens, the system doesn't wait, it adapts. Watch that video next. Link in the description. Now, let's play out the worst-case scenario. Powell resigns under pressure. Markets immediately price in instability. Yields urge, the dollar drops. Equities correct. The new Fed chair, even if credible, steps into a storm. Because the message to investors would be clear. Policy is no longer data-driven. It's politically constrained. And with US debt above $34 trillion, the margin for error is gone. That's what makes Waller's role so complicated. He's a sitting Fed governor, now publicly diverging from Powell. He's also openly stated that if Trump offered him the job, he'd take it. And right now, he's being floated as one of the frontrunners to lead the Fed in 2025. So what does the market believe? That Waller's dissent is a genuine warning? Or a message that the Fed is already being reshaped from the inside? Because if Powell finishes his term and Trump names a replacement in September, markets may have time to adjust. But if Powell is forced out early, if Jefferson takes over temporarily, if political figures like Kevin Warsh or Kevin Hassett step in with unclear mandates, then the system has a problem. Because monetary policy at its core runs on confidence. And when that breaks, the mechanics don't matter. The signals don't matter. Only trust matters. This is Global Notes by JP. If you value macro insights without the noise, subscribe for more. And comment below. Should Powell finish his term, or is it time for new leadership? And don't forget, if you missed our deep dive on Walmart and Amazon's stablecoin pivot, it's essential context for everything you just heard. Because when trust in government money weakens, new systems rise. Watch it next. Link in the description.